Hello there. Welcome again to Financial Accounting Info. Uh, Now we want to look at a question of still on June 2023. Question on departmental accounts. Question 4. The question reads: Young designers in two departments, evening wear and swimwear. They use the periodic inventory system to prepare their financial statements. Right. What is key there is that the young designers are using the periodic inventory system. We know we have two inventory systems that are there. We have got perpetual inventory system and then the periodic inventory system. So they are different in terms of the valuation of cost of sales, whereby the inventory system, so the periodic inventory system uses the formula of the trading account to value cost of sales after physical stock count has been done at the end of the period. So we are going to employ this one, the periodic inventory system. And the question says you use the information below to do the following. First part requires us to prepare the close of the departmental purchase account. So you would see that in the periodic inventory system, we open the purchases account when we purchase goods, that is when we purchase stock. But in the perpetual, we open the trading stock account or the inventory account. So that's the other difference that is there between the perpetual and the periodic inventory system. So let's look at the first one. Let's try to prepare that one. Then after that, we are going to prepare a departmental statement of profit or loss. And then we have to note that where applicable, show all the calculations in bracket. Right. Our departmental purchase account, if you come here, we have got the purchases for the period. For evening wear, we've got 236,000. Then for swimwear, we have got 168,000. So we're going to use these balances as our beginning balances or a balance brought forward. So if you come here on our answer section, we are having these balances here. Balance brought forward 236,000 and 168,000. These are the balances that we are given there in that list of balances. So we then check other entries that we need to do in the purchase account. So if we go down with our question, looking for any item that we can put into that purchases account, we have got, let's try to check for all the additional information on what we can put in that purchases account. So anything that is affecting purchases, we are going to add it into that account. So let's look at the first one. Miss Young took an evening dress home for her personal use. The market selling price was 21,000 rands. Young designers prices evening gowns at cost plus 200%. So we see that this is going to affect the purchases. Remember, we said when using the periodic inventory system, when we buy goods, we open the purchase account. So it means whatever is being bought in the form of inventory, you're going to take the purchase account. But here we are told that Miss Young took an evening dress. So these are drawings because these are for personal use. These are drawings that were taken. But these drawings are got a selling price of 21,000, and we are told that they are being sold at a markup of 200%, cost plus 200%. So it means 200% becomes our markup. So the cost price is the one that you want to use there to subtract from the. Remember when we record them in the purchase account, we recorded cost price. So here is selling price. So selling price is equal to cost price plus markup. So in this case, our cost price is always 100%. Then we are being told that our markup is 200%. So it means our selling price is what? Is 300%. So for us to find our cost price here, in other words, what we are saying is our selling price is 300. We are just saying 300. Sorry, 300 is equal to 21,000. 300% is supposed to be 1,000. Then we are looking for 100%. So we would want to make a proportion there. So this side is the one that we have got both figures. So the figure that we want is a smaller figure, 100 compared to 300. So the figure that we want, we put it as a numerator, and then the one that and the one that we are given the value, we put it as a denominator, then we multiply by the figure given, which is 21,000. So if you do this, you're supposed to get 7,000. So it means that this is the cost price of those goods that were taken. So we're going to remove 7,000 from the purchase account. So purchases are basically as with a normal debit balance. When we purchase, we debit the purchase account. So it means these goods were on the debit side of the purchase account. Now they were withdrawn, so we are going to credit to remove them. So we go there to our purchases account. We go to the credit side, then we write drawings. Then in brackets, you can just summarize the working. We said 100 over 300 times 21,000. 21,000. And these drawings were for evening. So we are going to put 7,000 here. Right. So we go again to check any other transaction that is there that is going to affect the purchase account. We can go through the additional information to try to find any other item that is affecting. The next one is talking is explaining about finance costs, finance income, which must be shared, which doesn't affect the purchase account. Rent. The fourth one is talking about rent, which doesn't affect. Then we go to advertising expenses, salaries. Try to look for any other. We have let's go to item 2. Yeah, we are here now on item 2. Evening gown fabric purchased for 5,000 rands was incorrectly debited to swimwear. This must be corrected. So when we purchased evening, we incorrectly debited it to swimwear. So we have to remove it from swimwear, and then we put it not in the evening column. So that's the case. So it's this figure 5,000 is on the debit side of swimwear. So we go to the credit to remove it from swimwear, then we enter the debit of evening gown. So basically, here what we are saying we are supposed to correct it. We debit evening, and then we credit swimwear. So this is the double entry that we are supposed to make there. So it means we are going to input that in that. Remember, we put a column for evening and a column for swimwear. So we are going to credit the swim. So we can just call it a transfer. Then it's 5,000. We are removing it in swim. Then we transfer it to evening. 5,000. Right. We go back again to check if we've got anything again to do with purchases. So item 6 is the last one. You can see that there's nothing else that we have there. We go in the balance of that purchases account. So we are going to have some double lines here, both on the debit and on the credit. Remember, this should be in the same line, this side and this side. Right. If we add, so the remainder, obviously, the remainder is supposed to be transferred to the trading account. Remember, purchases is part of the trading account. In that formula that we say, when you're in the trading account, we have that formula which say opening stock, we add purchases, and then we less closing stock or closing input to get cost of sales. This is found in the trading account. So we after making our adjustment, we then transfer the figure that we have in that account to the purchases account. So if you look here for evening, so for evening, we are going to balance what is in the credit side of the column of the of evening and then what is on the debit side of evening. So you can see that the debit is the bigger side. So if you add the total of the evening, you say 236,000 plus 5,000, you are supposed to get 241,000. Then you put it again on the credit side, was the bigger side. Then you now subtract, having done that, you now subtract the 7,000 that we have there to get the balance. When we say 241,000 minus 7,000, we get 234,000. Right. So this one is going to the trading account, this balance. Right. So that marks the end of the purchase account. Then we now move on to the next item, which is the departmental statement of profit or loss for the year ended. For the year ended 28 February 2021. So we have got the details section, then we have got the department for evening wear, department for swimwear. So we're going to start with revenue. So we can go there to find out what amount do we have for revenue. If you go there, that's where we have got the balances. Right, we have the balances here. We have got our revenue for wear, and then we have got our revenue there for evening wear. Then we have got our revenue for swimwear. So, but also we have got some returns. Remember, sales returns. These are revenue that we get by after selling, and then we also have some sales returns. So they are going to affect our revenue by reducing the revenue. So we are going to say 575 minus 25 for evening. And then for swimwear, we are going to say 265. Then we subtract the returns, which are 15,000. So that's what we are going to summarize there for revenue. So we can just maybe show the working in brackets here by saying the first one for evening, 575,000, 25,000. And then you can say and show that this one is now for swimwear. It's 265. And then you subtract 15,000. So if you do this for evening, if you subtract this one, 575,000 minus 25,000, you're supposed to get 550,000. Then you go to swimwear, you say 265,000 minus 15,000, then you get 250,000. Right. So having done that, we now subtract cost of sales. So we can just say less cost of sales. Then you go back again to find out the figure for cost of sales. Try to find out the figure for cost of sales. We check there on how we can find that figure for cost of sales. Right, so if you are seeing that we don't have the figure for cost of sales, so we are going to find cost of sales by using that formula that we say opening stock, we add purchases, then we subtract the closing stock, so the closing inventory, right? So we are going to start beneath that. We are going to start with the opening inventory here, that is on 1 March 2020. Then we add our purchases. If we have got returns for purchases, we are going to subtract. Then we also subtract the closing stock on 28 February 2021. So let's start by entering our opening inventory, whereby we have 40,000 and 60,000. So we go there and say opening inventory. So we are going to put for evening wear, we have 40,000. Then for swimwear, we have got 60,000. Then obviously we add purchases. So this is the trading account that we are just putting there. Then we've got our purchases. Then we go and check our figures for purchases. For purchases, we are here. We have this one, 236,000 there and 168,000 here. 136,000 and 168,000. Let me put those figures. 234. 234,000 at 163,000. Move our page up. Then after that, now we go to, after adding purchases, remember that formula of the trading account with then less closing stock or closing inventory. Right, we go and check again our closing inventory. Our closing inventory, we are finding it here is on 28 February 2021, whereby we have 50,000 and we've got 70,000. And then we put that one. So here we have put our 50,000. And here we have put our 70,000. And then we are subtracting, so we are putting it in brackets here so that we are subtracting. Right. Having done that, now we calculate these figures so that we find the cost of sales figure. Right. So we add that one and add 40,000 plus 234,000. We subtract 50,000 there. The total that you get there, you're supposed to put it there to represent cost of sales. So if you say 40,000 plus 234,000 minus 50,000, you're supposed to get 224,000. The same year, you do the same again. You say 60,000 plus 163,000 minus 70,000, you get 153,000. Right. So this one, we are saying less cost of sales. Remember, here we are saying less cost of sales, so it means we subtract cost of sales from the figure for revenue. So here again, we put some brackets so that show that we are subtracting. So for the first one, which is evening, where we say 550,000 minus 224,000, then we put the answer here. We are supposed to get 326,000. 326,000 there. $326,000. Then here we say 250,000 minus 153,000. Then we get 97,000 here. So the figure that we get here is gross profit. Remember, the formula for gross profit is revenue minus cost of sales. So having done that, now we go to add other income. Add other income. So this will be showing you what you are supposed to do there. Here we are saying add, so it means we are going to add that the figure for other income. Then for other income, we try to find out what income do we have in the question. You put the income beneath here, then the total for the other income, you put it here to represent other income, then you add it to this figure. Right. So we go back to try to see what other income do we have in the question. So you can check in the list of balances there. We've got this finance income. That's the first one. But we are given it as a one figure, 30,000, and we would want to see how we supposed to apportion that between the two departments that we have there. If you come on number 3, it's saying finance income has shared in the ratio of 2:1 between evening wear and swimwear. So it means for evening it's 2, then for swimwear it's 1. So what are we supposed to do for evening? We are going to say 2 over the total of 2 plus 1 is 3, so it's 2 over 3 for evening. Then for swimwear it's 1, so it's 1 over 3. So let's go and put that one in the amount. The amount for that for finance costs is given there. Let's check the amount there. The amount for finance income is 6,000. The amount is 6,000. So we are just going to say 2 over 3 times 6,000 for evening one. Let's go there, and then we say finance income. Finance income. So we are going to say 2 over 3 times 6,000, that is for evening, over 1. And then for the other one is 1 over 3 times 6,000 over 1. So if you say 2 over 3 times 6,000, remember 3 to 6,000, you get 2,000 there. Then you multiply by 2, you get 4,000. So here you've got 4,000. And then for the other one, for swim, you say 1 over 3 times 6,000, you get 2,000. So that is what we have there. Then you go and look for another income that we have in the question. Go to the list of balances that we are given. Under finance income, we've got rent income here. It's also income. Then we find out how are we supposed to apportion that rent income. Rent income on number 4 must be allocated in proportion to the floor space used by each department. So if you go there, the floor space is given there as 40 and 60. So if you add 40 and 60 there, 40 plus 60 to get the denominator, you get 100. So it means for evening, you're going to say 40 over 100. Then for swimwear, we're going to say 60 over 100. So basically, this one you can quickly put it convert it to decimal. 100 into 40, obviously you get 0.4. And this one also, you can easily put it to a decimal. 100 into 60, you get 0.6. So we are going to use 0.4 and 0.6, and the amount is 30,000. It's given here, 30,000. So we are going to apportion that one. So let's go there and try to put those figures. Right. So now we have got rent income. Remember for evening we say it's 0.4. That we are multiplying it by 30,000, which is the total. And then for the other one, we are saying 0.6 times 30,000. So if you say 0.4 times 30,000, you are supposed to get 12,000. Then 0.6 times 30,000, you are supposed to get 18,000. 18,000. In such a way that if you add 18,000 plus 12,000, you get 30,000 that we are sharing. Right. Then after that, we go to look again if we have got another income that is there in the question. Right. Come here. We see rent income was the last one there. We no longer have another income that is there in the question. So it means we are done with income. We can go and add the total for income there. So here we are just going to do this. If we add 4 plus 12, we add 4 plus 12, what are we supposed to get there? Here 4 plus 2, we get 6, so it means 16. 16,000. Then you say 2 plus 18, you get 20,000. Right. So we are adding, 326 plus 16. If we do that, we get 342,000. And then if you add it there, 97 plus 20, you get 170. So that is what we have there. Right. So after that now, the figures that we got here, we can call those figures gross income for the year. Gross income for the year. And then after that again, we are now subtracting distribution, administration, and other costs. So here we are saying less distribution, administration, and other costs. We are lessing. Let's take note of that. So you are subtracting. So we are going to check on those costs that fall under that category. Here, if we check, let's go to the question and see the list of balances that we are given. Right. Right. Here we have got carriage on sales is part of those costs. Carriage on sales there. So let's go and put carriage on sales. We've got 1,500 for evening, and then for swim we have got 2,000. So we are going to put that one carriage. Carriage on sales. Carriage on sales, we have 1,500 here. And then here we have got 2,000. Remember, we are subtracting, so we can show it in brackets. Then after carriage on sales, we check again for another expense. We have also advertising. Advertising is here and it's 40,000. So one figure is not allocated, so we need to see what allocation method are we going to use there. We can check what allocation method are we going to check in the additional information in terms of advertising. It's number 5. Advertising expenses must be allocated in proportion to the gross revenue. To the gross revenue, and the gross revenue is the figure for revenue that we have there, that we found there. So the figure that we are going to allocate for advertising is 40,000. So we can allocate that one using that ratio. So the ratio that is being said gross revenue, we have this one for revenue. We have 550 here for evening, and then 250,000 for swimwear. So we can just do this. 550 plus 250. So we are going to say 550,000 plus 250,000 to get the denominator. So if you add the two, 550 plus 250, you are supposed to get 800. You get 800,000. So this is going to be your denominator. So for evening wear, we have 550. So you are going to say 550,000 over 800,000. Then we multiply by the figure that we are supposed to apportion, which is 40,000. So we multiply by 40,000 over 1. Then we do the same thing for swimwear. Now we are saying 250 over 800,000 times 40,000. So we go there to show that we put that working in brackets. So here we are saying we are on advertising. Advertising. Right. On advertising, we are saying the first one we said is 550. 550,000. Let's check there, 550,000. Then we say over 800,000. Then we multiply by 40,000 over 1. Then the second working is 250,000 over 800,000 times 40,000. 40,000 over 1. So if you do that for evening, 550 over 800 times 100 over 1, you are supposed to get 27,500. Show it in brackets. Then on swim, if you say 250,000 over 800,000 times 40,000 over 1, you are supposed to get 12,500. Again, we show it in brackets. Then we go to look for another expense that we have there. We check for another expense in the question. So if you go in the question again, we have salaries and wages here. So this is the last one. And we try to see what type of apportioning or ratio are we using there. For salaries, number 6, salaries must be allocated in proportion to the number of employees in each department. So number of employees is given in the table here. We've got for evening we've got 2, for swimming we've got 4. So we're just going to say 2 plus 4 and get the denominator is 6. So for evening we are saying 2 over 6 times the figure for salary is 330,000. And for swim we are going to say 4 over 6 times 330,000. So we go there and say salaries and wages. Here we have got salaries and wages. So in brackets, we are just, the first one we said we are going to say 2 over 6. And then we multiply by 330,000 over 1. Then and the other one is 4 over 6. Multiply by 330,000 over 1. Then we just put it in brackets. Right. If you say 2 over 6 times 330,000, the figure that you are supposed to get there is 110,000. So we can exit this our lines down. Right. We said 2 over 6 times 330,000, you're supposed to get 110,000. Then the other one, 4 over 6 times 330,000, you get 220,000. Then we show it in brackets as we are subtracting. Right. So if you do that, as we are saying, this marks the end, the last cost that we have. So it means now we can now put our lines there, show the final figure. Right. So the final figure now we are starting here from gross income for the year. For evening, we are saying 342,000 minus 1,500 minus 27,500 minus 110,000. Then we get 203,000. It's a positive figure to show that it's a profit. Then the other one, you say 117,000. You subtract 2,000. You also subtract 12,500 and subtract 220,000. You are supposed to get a negative figure of 117,500. 117,500. So this one is a negative. We leave it in brackets to show that it's a negative figure. And the details of these figures is profit or loss for the year. Profit or loss for the year. So it doesn't mean we all make profits, we can make also losses. So for evening made a profit of 203,000, but we are seeing that swim made a loss of 117,500. So this marks the end of our question, guys. Keep in touch. Those who have subscribed, please subscribe for more videos. With that, I'm out.